So this is it. This is the crash video. Because everybody says we're crashing, we must be crashing, we crashed. I'm Justin Miller with the Chong Miller Group. Chong Miller Group is a real estate team here in the Las Vegas Valley, and we help people buy and sell homes. Sort of a casual heat wave day in early September. And so I'm producing this video for you to let you know what's actually going on in the condo and townhome market segments of the Las Vegas Valley. It is September 7th as I record this, and we're looking at data from the month of August of 2022. Specifically, we're looking at resale data for condos and townhomes. Condos first and then townhomes. Now, as I get into this data, you're gonna see really dramatically how the market has crashed. And I'll tell you, there's a lot of people out there who've been talking about this, who've been talking about it for 3/4 of a year, about how the market's collapsing, prices are dropping, people are going to be losing their shirts. Well, let's dig into the data. In August of 2022, resale condos, median sale price, $230,500. Now that is down. It's down a substantial 3.2% from $238,000 or $7,500. Down 3.2%. Now, kind of interestingly though, we're up year over year from August of 2021. We are up from $199,500 or we are up $31,000. That is 15.5% price appreciation for the median condo in the Las Vegas Valley year over year over the past 12 months. Now, another way to look at this is what's gone on year to date. So from January 1st through August 31st. Well, we're up from $215,000 or $15,500. We are up 7.2% year to date. What crash? Maybe they mean we're crashing through their expectations of prices plummeting, because prices are not plummeting. We're down 3.2% month over month, and we're up 7.2% from the beginning of the year. Now, I give some explanation for what's going on in the market in the single family update, and I recommend you go watch that, but at least the first half of that video. But as we saw in the single family market, we're up year to date, we're down over the past month. We're actually down for a couple of months in a row. But we're not down very substantially because we're still up 7.2% year to date. That's pretty strong pricing, right? That means literally if you had bought a condo on January 1st, median condo, and for some reason you needed to sell that condo right now or August 31st, after all your transaction costs, you would have come out just about exactly, literally flat. You would not have lost any money on that purchase. That's a pretty good thing in a market that's just collapsing and crashing, and people are jumping out of windows terrified about what's happening with all the wealth they have in their homes. In other words, there's no crash. There's no crash at all. There are a lot of people out there saying really scary stuff. And they're saying that scary stuff because they want to be listened to. And then they start interviewing other people who say the same scary stuff that they're saying. And they repeat it in an echo chamber that unfortunately individuals get caught in. right? You search once in a while for something about the housing market and you see a crash and you click on the news article, and now all of the news articles you get are about the crash in the real estate market. And it's all fake. What's crashing are the morons who are putting that information out there. Except, of course, they're getting millions of YouTube views and millions of blog listens and et cetera, right? Why? Because they exist in an echo chamber that pulls people in. Obviously, I don't have millions of viewers. I don't need millions of viewers. I'm not trying to be a YouTube sensation. I'm trying to actually put out valid information that helps you make decisions in this market. And if you think there's other people who could benefit from the information that I put out, I would greatly appreciate you sharing my videos with them and or forwarding their information to me, and I can reach out to them and make sure that they know there's resources out here that actually have correct information and valid insights and put things into a perspective that can allow them to remain sane and financially secure. So, year to date, up 7.2%. Well, is anyone buying? Are there any condos that are actually selling? Because, again, presumably the market's crashing and everybody's flying away and leaving and etc. 344 condos sold in the month of August. Now, it is down. It's down 3 condos from July, down from 347 or 0.9%. And by the way, that number, if we look at sales since 2009, that number of 344, that's just about normal, just about exactly normal. This is about a normal market. In a normal market, we go up a little bit some months, we go down a little bit some months. It's 7.2%. We actually are above normal year-over-year price increases. We're up 15.5% year-over-year. But thinking about if we just maintain where we are, literally flat for the rest of the year, we'd be up 7.2% at the end of the year. That's actually pretty strong price appreciation for a year. The 15.5 is very strong. Last year, certainly we were seeing stronger numbers for a variety of reasons, but pricing strong and volume just about normal. Now we are down a lot from last year. Volume, 503, we're down 31.6%. But remember last year, strongest volume year in the history of the Las Vegas Valley. So making a comparison off that high point is problematic statistically, and it's misleading. So I put that number out there for symmetry across all the market update videos because I always put the year-over-year information. But it's a worthless number and consequently a worthless statistic. So ignore that. We're down 0.9% or 3 condos from the prior month. What about for sale? Where we've been getting all this inventory build. Well, we had a little bit of inventory build in August. We had 1,161 condos for sale at the end of the month. And that is up. It's up 19 condos from 1,142. It's up 1.7% from where we ended July. That's about 80% of normal inventory in the market. So we have not yet gotten to normal. We're just approaching it. And this month we approached it by only 19 additional units. So we're approaching normal at a really slow pace right now. We're 80% approximately of normal. What about new condos in the market? Because people are just flooding their listings because they're trying to get out before the market collapses. Well, apparently they missed that boat. 548 newly listed resale condos in the Las Vegas Valley in the month of August. That's down. It's down 17.1% from the 661 newly listed in July. So apparently some people are realizing there's no crash coming and they don't need to list their condos right now to flee because there's no crash coming. So it's about normal. The 548, it's about normal new list into market. Now we are down also, interestingly, year over year for new into market. This is one of the first segments that has shown real improvement here. New into market last year, 622. This year, 548. So we're down 11.9% newly listed resale condos from where we were last year. So inventory about 80%, new into market about normal, prices pretty close to stable, down 3.2% month over month, but we're up 7.2% year to date. It's a pretty stable market. If this is what a crash looks like, I need to look up the term in the dictionary because I thought it meant something really different. September numbers likely better, October numbers likely better, November, December. Do know seasonally those are the weakest months of the year in terms of volume. So we'll see a pullback in November and December just because that happens every year. That's not anything about an unusual state of the market. That's a normal state of the market. But September, we're going to see better numbers than we saw in August, which are looking pretty decent. And October, we'll probably see better numbers than September. And once we get to next year, I think we're going to start to see significant inventory constraints rematerializing in this market. And we're going to start to see significant upward pricing pressure in this market. Now, clearly the Federal Reserve could do really crazy stuff with the Fed funds rate, which will spill over into mortgage interest rates. And clearly people are sensitive about the mortgage interest rate market for a variety of reasons, including it costs more to buy a property on a mortgage if the mortgage interest rate is higher. But the Fed's going to run out of steam here on their interest rate increase regime at some point in time. It probably won't happen this year, 2022, but next year at some point in time, we're going to see those interest rate increases stop. And we'll probably, before the end of 2023, start to see interest rates come back down because the Fed is going to induce a recession. They have stopped talking about, well, we might be able to avoid a recession. They've stopped talking about it may be a mild recession, a soft landing. And now all the members of the Federal Reserve are simply stating there'll be a recession next year. And we may actually already be in a recession, depending on what the National Bureau of Economic Researchers declares, but we've had 2 quarters of negative economic growth. And so by lay definition, we're actually already in that recession. But we'll start to see further economic weakening, which will ultimately cause the Fed to pull back from their interest rate increase regime that they're embedded in right now. And in the single family video, market update video, I give some strong statements you might want to go look at about what the Fed is doing and why it's actually counterproductive. It will eliminate inflation, but transitorily. We are actually existing in a generalized inflation environment, which we can see because inflation is up all across the world. And beyond that, we have demographically significant reasons to see inflation at this point in time in the demographic growth of the country. So there are times that are deflationary and there are times that are inflationary, and we happen to be in one of those times. And so what the Fed does right now doesn't have a long-term impact. Frankly, what the Fed is doing right now could very well put us into a stagflation environment where we have increasing levels of unemployment and decreasing levels of economic growth, where we're not negative, where we're not sitting technically in a recession, with high levels of inflation. The Fed managed to accomplish that. Beautiful task, stagflation in the late 70s. And I would suggest that's actually where the Fed is taking us right now. We're going to end up with both increasing levels of unemployment and relatively high levels of inflation. Okay, one other statistic for condos. Back on market. Back on market, 166 in August. That is 32.5% of contracts that were written. That is flat from the month prior, 32.2% in July. That's flat. That number has been trending down a little bit over the previous months, and I expect that trend to continue generally down over the next several months. Fortunately, because we are still elevated for back on market. But many of the factors that are leading to cancellation of contracts, meaning properties come back into the market, are starting to be mitigated, and I expect that that trend will continue. So if you find these videos helpful or useful, please smash the like button, please subscribe, please share these videos. And since it's become common for some YouTubers to provide you little benefits, extra little benefits for smashing the like button, here is a picture of a stuffed bear. All right, now moving on to townhomes. Median sale price for townhomes in August, $320,000. Any guesses about how that compares to July? Crashing. July's number, $322,000. We are down exactly nothing. We're up nothing. We are perfectly flat. Through the month of July and August, a flat pricing market in townhomes. 2 months of literal pricing stability at the median for the townhome market. That's an even more amazing crash than we saw in condos. Flat, totally flat. Nothing to see here, folks. There's no crash. That's not a fender bender. It's not even a scratch in the parking lot. There's no crash. It is flat. Everything is functioning completely fine, flat. Now, what about year over year? To August of 2021, we're up 12.7% from $284,000. And by the way, that 12.7% up in townhomes, that compares to up 15.5% in condos and up 10.4% year over year for single family homes. So very much in line with the rest of the market for townhomes in the month of August. And we're up from $307,000 or $13,000 year to date from January 1st through the end of August. We're up 4.2% year to date for townhome pricing, which is actually almost identical to the year to date increase in single family homes as well. There's no crash. We're not coming down. There's actually on pricing, there's not a single negative number for month over month, year over year, or year to date that I just reported to you. There's no crash. Ain't happening. That's not going to happen. We're not on the precipice of a collapse in anything with the townhome market. Now, what about units sold? Because maybe that's just collapsing, right? And it's invisible. You don't see it in the pricing. Maybe, but maybe not. Townhomes sold in the month of August of 2022, resale townhomes, 255. That is, it's up 5.8% from the 241. Now remember, the number of townhomes is small that get transacted in any particular month. So it's up, it's up 14 townhomes, but it's up 5.8% from the number of townhomes that were transacted in July of 2022. And by the way, that if we look at post 2008, so sort of market collapse through present, right? And I'm not looking at the really, really challenging exactly when the market collapsed here in Las Vegas in 2006 and 7. 2008 to present. So was that 22 minus 8, 14 years of data. That's pretty close to normal for number of townhomes that get sold in a month. About 255. Now we are down. We're way down from where we were last year, the strongest volume year in the history of Las Vegas. We're down from 371. We're down 31.2%. Right, a meaningless number. I put it out there just so you know. If you're seeing that number somewhere else, you'll know what that is. It's a comparison to the height of the market, and therefore it's a meaningless number, because anytime you draw a statistic off the very top or the very bottom, you're getting something that looks amazing but is truly economically meaningless, meaning there's no informational value in it. We're up 5.8% month over month. Well, what about units for sale? Right, inventory has been flooding into the market, high level of inventory. Well, 775 townhomes for sale in the month of August. That's up. It's up 5.9% from the 732. So it's up 43 townhomes, up 5.9% from where we were in terms of inventory at the end of July. And we're actually at about 90% of normal inventory in sort of the post 2008 marketplace. So not quite normal levels of inventory. We're up slightly month over month, 5.9%, up 43 townhomes for sale. And what about new into market? New into market, 448 townhomes newly listed in August. This is actually up. It's up slightly, up 2.5% from the 437 newly listed in July. And it's up 2.8% from the 435 newly listed townhomes, newly listed resale townhomes in August of 2021. So we're up marginally. We're up, 11 townhomes newly listed in August relative to what it was in July. So for practical purposes, approximately flat, right? So this is a very stable market. The new inventory, or rather new listed, is just slightly elevated for townhomes, but we're at 90% of normal inventory. And that contrasts to condos. We're at about 80% of normal inventory, and we're just about normal on newly listed. So the condo market may turn, the last 2 years, the townhome market actually turned in front of the condo market to become more inventory constrained and started seeing really big pricing increases. It's possible, because we don't have the same kind of predicates for what would be influencing demand, desirability of living in one particular type of multifamily environment relative to another. It's possible that we're actually going to see a turn toward tighter inventory and escalating prices, accelerating prices, appreciating prices at the very least, in the condo market ahead of the townhome market as we get through 2022 and into 2023, where I think we're going to see across the entire housing data complex increasing or return to tight inventory problems and accelerating appreciation levels. Okay, one other thing, back on market. Back on market, 114 in August. That is 30.9% of all of the townhome contracts that were written in August. That's a small decrease from the 31.5% of all contracts that were written coming back on market in July. And again, like I said with condos, I expect that this number, because I expect for structural reasons, we're going to see back on market numbers trending down. They'll likely be coming down slowly over time, but I think that we're going to see greater stability in the contracts that are being written for a variety of structural reasons as we go forward in time. And that's great news for the market, because these elevated back on market numbers, problematic. They're disruptive to buyers, they're disruptive to sellers. It does not help for a marketplace to see what you could analogize to returns, right? If you went to a car dealership and you bought a car and you took it back in a day, that doesn't help anyone. It doesn't help the dealer, it doesn't help the buyer, it doesn't help the manufacturer, et cetera, et cetera. So we need to get these back on market numbers down. Part of that is skill of real estate agents. Part of that is appraisal issues. Part of it is inspection issues. There are ways to mitigate some of those challenges that may happen in any particular transaction. And some agents are going to be better at helping you with that than will other agents. But I think these numbers will be trending down a little bit over time. And normal is about 20%. So we're elevated some from that, but it's better than the 39, 40, 45% of back on market that we were seeing last year on many months. So this is actually an improvement. Okay, so I am Justin Miller. I'm one of the co-founders and principals of the Chong Miller Group. We are a Las Vegas real estate team that helps people buy and sell homes, including condos and townhomes. If you find this information helpful, again, please subscribe. Please share it with your neighbors, your friends, your family, your colleagues, anyone you think might benefit from the insights that you get in my videos, such as learning what crashes really are. And please smash the like button. I will look forward to your comments, and I look forward to seeing you in the next video and hopefully talking soon. Thank you. Bye-bye.